The next thing that we're going to discuss will be accrued revenues. We saw in the previous lecture that an accrued expense is an expense that has happened, but we haven't paid it, an expense that is incurred, but it hasn't been paid yet. But now our definition for an accrued revenue will be similar, but just the reverse of it. It's a revenue that has been earned, but we haven't what? Received. So, accrued revenue, it's going to be a revenue earned but not yet received. Revenue earned but not yet received. Okay? So it's the opposite of a accrued expense, because an accrued expense is expense that is incurred but it hasn't been paid. And just like we said how the rule was with accruals for expenses, it goes the same with revenues. Anytime you earn a revenue, regardless if you receive the cash for it or not, it must be recorded. And that's why we need an adjusted entry for this. So you guys are already familiar with this, honestly, because we've been providing services on account from day one. Now we have a name to that particular transaction. Remember when you provided a service on the account and you didn't collect cash? That's an example of an accrued revenue. So we already know how to journalize this. The fact that the revenue was earned means you have to record it and put it on the books. How do you increase revenues? By credit. But the fact that you did not receive it yet means that someone has to pay you. You have to collect in the future. So you have to set up a what? Account. What kind of account? A receivable. So anytime you have an accrued revenue, your entry is going to dictate a debit to a receivable and a credit to a revenue. Okay? So, we talked about interest earlier in the early example, and we said that interest that was paid was an expense to the company, which it actually is. But interest works two ways. You can pay interest or you can receive interest. If you're paying someone interest, then that's an expense to the company. However, if you are receiving interest, then that's a revenue to the company. And so on this end, if I say an accrued interest revenue, keyword accrued, keyword revenue, then you know that I am receiving it. And so how would you record an accrued interest revenue? You would do the same thing. You would debit what? Interest receivable. And you would credit what? Interest revenue. For how much? Whatever they give you. Piece of cake. Your accruals are very easy. You just memorize the format of the definition and you apply it through a journal entry.